So a question I've been getting pretty often is now the best time to buy, right? Right now we are seeing a pretty decent rally even after today's performance. Market's still up quite a bit, especially after tech earnings, this FOMC meeting that we had, and then shortly after that, we just had our CPI and PPI be reported that was better than expected. I'm going to share my thoughts with you guys. You guys let me know in the comment section what you think, if you agree or disagree. I'm not here to overwhelm you with my opinion. I'm here just to share my thoughts on why I think we're getting pretty close. And I think that's very, very exciting. So I hope that you learned something new. If you do, please consider dropping a thumbs up and subscribing. And if you have any questions after this video, even if you're an absolute beginner, I hope that you know that I'm always one direct message away. And that's that first link down below of this video or in this video. So let's go ahead and talk about this very quickly. PPI report was released today. We talked about it in today's earlier video. Came in better than expected. The producer price index is very similar to the CPI, but instead of the consumer side, it's focused on the producer side. We talked about it today with our live stream with our Learn Plan Profit group on why it's important and useful to stay up to date with PPI, as it can almost forecast future inflation or deflation for CPI, right? If we see inflation or deflation on the producing side, then maybe we could potentially see that adjustment later down the road on the consumer side. It's kind of like this domino effect. If I'm not mistaken, I think overall PPI expectations were to be at 10.4%, and it came in at 9.8%, and our expected growth I think was 0.2, and we actually came in at 0.5. So again, better than expected, which is two double whammies, right? Or I guess just the double whammy in the way that the overall market reacted today. Very unfortunate. We did see a little bit of a pullback, nothing very significant, 1.5%. And one of the things that I wanted to share with you is, like, I wanted to use this as an example. Maybe not TQQQ, but I'll use QQQ as an example. This is a Nasdaq ETF, very similar to SPY, right? SPY focuses on the S&P 500. QQQ focus on the Nasdaq. I have a little bit more of a preference or a focus on Nasdaq myself, so I'm just going to use this as an example. First thing that I want to talk about is on the technical side. QQQ, the overall markets are due for a pullback. It's not a question. It's not like if it's going to happen. It's like, it's just when. Markets always pull back even when they're on a consistent rally. You see that they rally for some time and then they pull on back. Pullback should simply be viewed, right? So there's always this negative connotation towards pullbacks. And I think that's because a lot of people are never prepared. This is something that I always try to empower people to do in my videos, of always prepare for worst case scenario and always have cash available just in case that worst case scenario does end up presenting itself. Then guess what? If the markets do pull back, then who cares, right? If your intention is to invest in long term, you got to buy them at a better deal. That's the way that I look at it, right? If your perspective and your intention is long-term, then you should get excited with these pullbacks. And this is no different, right? We've seen a nice rally. We've seen a nice rally based off of the past 3 weeks. It is time for a pullback. I could see a retracement back to the EMA. Do I think, this is a question a lot of people have been having, do I think that the market's absolutely going to crash? No, I think the selling pressure that we've experienced already for the past 7 months, right? Going from January all the way down to, what is this, kind of like June and July, that selling pressure was insane. And I feel like there's just so much selling pressure during that time. We just really wanted to find that bottom. We traded sideways almost for an entire month, and now we're finally indicating signs of an uptrend. I think that we might pull on back, and sure, right? Who cares if you're prepared? This is why we always talk about never being fully invested and always having money on the sidelines. So if the market does pull on back, this is what I'm most excited about. This time, when the market does pull on back, this is the time that I'm going to load up a little bit more effectively. I'm still not going to go all in, but a little bit more effectively, because I think that institutions, which again create a lot of that selling pressure, even scaring long-term investors, right, or retail traders like you and I, there's no question that selling pressure, like, there's a lot of fear in the market. And I think that fear is now with our original concerns, right? I kind of like to ask myself the question backwards. It's like, well, what originally got us here? Higher inflation, right? How is it that we're trying to combat that? Well, we're raising interest rates, Russia attacked Ukraine, all of that stuff, the oil crisis. Well, guess what? We just showed somewhat, right? A lot of people don't believe the CPI or the PPI report, but we just showed that CPI and PPI inflation has peaked, right? For overall inflation, I think we're at 8.5%, and for PPI right now we sit at 9.8%. So based off of the previous month of June, and then now where we sit in July, oil prices are beginning to come down. Energy has been one of the biggest contributing factors on why inflation or the CPI report would come in so high. And it's a reason why the Federal Reserve were taking such an aggressive approach and raising interest rates to try to bring down inflation. So when asking that question backwards of like, okay, well, this is what got us here. This is what got us to the very bottom of the market. Is that fear or is that concern still there? Well, of course, the Federal Reserve is still going to have to raise interest rates. But now seeing that, inflation and core inflation is finally beginning to come down, I mean, this just means that they have to take a less aggressive approach. And it doesn't mean that everything's going to be, a walk in the park, but it means that, hey, we're seeing progress. We don't have to be as aggressive as we have been. And I think because of that, because we got rid of the selling pressure, because things are actually beginning to not get worse and slowly getting better, I can see that, yeah, a pullback on the technical side is needed. But I think that this is why I do not believe that we're going to make new lows unless something that is unprecedented ends up happening, right? So if there's a war that goes between China and Taiwan, then yeah, of course, that's something that we did not expect, and more selling pressure, more fear will get injected into the market. And that's kind of just the way that I wanted to position it, right? I like to first understand, well, what originally caused so much selling pressure? What originally caused so much fear? Inflation, interest rates, right? Now with that being said and done, it's, yeah, could we still go through a potential recession? Maybe. I feel like people are more aware of like, hey, interest rates are pretty high right now. People are cutting back on their spending, but, people are still spending money. Our economy is still going strong. And interest rates are only set to be better moving forward, right? I think even in the past week, when it comes down to the housing market, interest rates in the past week have gone down. So it's not that things are going to be absolutely better moving forward, but we're making progress. And I think that's what's very exciting. It's that same fear is no longer present in the market. Do we or can we expect a pullback? I hope that you're prepared for one. No question about it. Always. I don't care if the market's super bullish. You should always be prepared for one. I'm a big believer in that. But when actually asking the question of like, hey, do we think that we might be done with a very aggressive sell-off and or make new lows? Yeah, I think because of inflation, because of the CPI, the PPI data report, I'm excited for this FOMC meeting that we're set to have in September. And I think that will give us a better understanding of, what's to be put in place for the next couple of months, right? So I'm pumped about that. I do want to remind you that tomorrow we do have an economic report that's going to be released, and it is the consumer sentiment. And this is going to be, if I'm not mistaken, 30 minutes after the market opens. I will be live with my Learn Plan Profit group live streaming it. You definitely don't have to be a part of it. But if you want to join, again, I do trade live every single morning exclusively with my Learn Plan Profit group. So if you want to join us right now, we are running a huge sale and it's $100 off. It's a lifetime access, one-time payment. It's all inclusive. You get access to the A to Z video lesson library designed for a complete beginner, our private LPP group chat, our daily live trading sessions. And yes, you also get access to our TechBuds HQ, which is located in Chandler, Arizona. All inclusive, one-time payment, lifetime access, and right now it's $100 off, and that's that second link down below. Again, if you have any questions after this video, you can either comment down below, but the best way to get in contact with me is definitely via Discord, and that's that first link in the description down below. I appreciate you guys' time. Hope that it earned a thumbs up. Please consider subscribing, and like always, let's make sure that we end the year on a green note. Take it easy, team.